to the Monday Futures Market Outlook for January 3rd, 2012. This is Patrick Srezna. For those of you that have not had the opportunity to try out the eminisource.com trading room, 5-day complimentary memberships are available on the website. As always, we start off with a weekly chart of the S&P 500 going back 3 decades, and we plot an 80-week moving average on there. It does a very good job to depict the bull and bear market cycles we've gone through. The last year, we've seen numerous bull and bear market signals above and below this 80-week moving average, continuously demonstrating the market's uncertainty in trend. And ultimately, we're expecting at some stage here the market will more than likely spend an extended period of time more than likely above that 80-week moving average, at least for the start of the year. Just to make some key intermarket observations, the euro continues to consolidate near that 130 level with a couple of stabs down at the 128.5 area where there's a major measured move finish off on the downside. It will cool off the US dollar and allow commodities and stocks markets to stabilize over the next few months if we see that the euro bounces. We could easily see a euro that could even bounce up towards 132 to 134, even potentially higher, as it just takes a breather off of a measured move lower on the downside, and this would certainly allow things to stabilize. So if we do get that bounce, it's likely that commodities will also take a breather from that selling pressure, and the stock market may continue to see strength in January as those headwinds calm down. So when we take a look at that S&P 500 chart, we were last Monday profile, we talked about this flagging formation, anticipating this rally higher. We got exactly that the way we've drawn it out here. We now can see that overhead resistance at 1275 to 1290 came into play fully this morning. This is a key obstacle for the markets, but it is something that can be overcome if we see the market push through this level on the upside. Then we really could see end of January a market that's trading up towards the 1340 upside target. But let's before we start looking for the very bullish scenarios, recognize that we have a substantial overhead resistance level that needs to be beat before we can really become bigger picture bullish. Next year, when we take a look at the US dollar index futures, you can see the US dollar has got a little gap lower. We were anticipating, even though it did break to a higher high, that blue box was an area that we anticipated the measured move on the upside of the dollar index to take a stall. At this stage, we fully think that there's room for the dollar index to backfill even down towards the 78 level, or 2 full points lower. It doesn't change our big picture outlook for the dollar, but it is not unrealistic to expect the dollar to consolidate in a period where the euro is finally bouncing off of its lows. Next year I want to take a look at copper, and when we take a look at copper futures, you can see the support line that we marked off in the blue held. We're no longer as optimistic on the upside of copper, but we do believe that a retest of those highs around 365, 375 is a very realistic upside test. There's always a chance that we might be able to push into the $3.90 to $4 area. Not as high of a probability as I'd like it to be, but it's certainly something we can't rule out on the short term. In the much bigger picture, we think that copper will weaken this year, but it will probably come off of higher levels. So in the month of January, expecting copper to strengthen here is not unrealistic. Next year, when we take a look at crude oil, crude oil continues to be the strongest commodity, and we now are drawing the flag this way, but really anticipating that this flag will break to the upside. We were saying that all consolidations that hold above the 90-92 level on the upside will turn bullish, and we're seeing that exactly happen. It's not unrealistic to expect crude oil at some stage to hit the 113 to 115 area before we really see more bearish scenarios for crude. But right now, certainly there is room for crude oil to be bullish for at least the next month or so. Next year, when we take a look at gold futures, gold really just did a key bottom retest of that low that was put in September around the 1540 level. Really at this stage, we moved the focal point to reflect that. It is quite realistic that if the US dollar is consolidating and everything's taking a break, that gold could easily get back up to even 1700 on the upside. Doesn't change our bigger picture outlook on gold, but it certainly is going to allow gold to take a much needed breather from the selling pressure that it's been under. Finally, I want to take a look at that 30-year Treasury bond, and the 30-year Treasury bond has got a little bit of a reversal going. We do believe that while in the bigger picture there's room for the Treasury bonds to even attempt to break out to new highs, it's more than likely still needs to have a further consolidation. A likely test of the 40-41 is not out of the realm of possibility, but also even a deeper test of 134-135 could happen before a much more a bullish scenario on 30-year Treasury bonds starts to develop. That was your Monday Futures Market Outlook. Thank you for joining me.